Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we're going to be analyzing two articles, to where the first one is titled, 2 Reasons to be Optimistic About SoFi Stock. So we're going to be going over their latest news updates, upcoming catalysts, and why investors really need to be paying attention to this company right now. The next article we're going to be analyzing is titled, Forget the Magnificent Seven. This stock has nearly quadrupled in 2024, and Wall Street thinks it can go a lot higher. So I want to make you aware of this company because it seems that not a lot of investors really know about this company right now. So without further ado, go ahead and annihilate that like button right now, subscribe if you are new, comment your thoughts down below about SoFi Technologies or about the stock that we're going to talk about next. And with that being said, let's get right into today's video. SoFi Technologies is a fintech company or a financial technology company that essentially operates as a digital bank. And we've already seen great success in this company. Just last year, their SoFi share price surged by 85% due to record revenue and member growth. SoFi's growth is normally attributed to its financial success in regards to their financial productivity loop, which emphasizes cross-selling and upselling. This is just a part of SoFi's business model, to where if you wanted just to get a credit card or a debit card from them, they are going to use this as an opportunity to enhance your financial future by also cross-selling or upselling you on other products, such as a checking account or a savings account. In Q3 alone, 67% of SoFi's revenue growth came from their non-lending segments, which is great news, because their lending segment is their dominant revenue segment. This shows investors that they can achieve success beyond the core of lending. And this also diversifies their business, which safeguards them against macroeconomic uncertainty and volatile interest rates. We also saw SoFi's bank services garner $2.9 billion worth of new deposits, which is critical for funding their $5.2 billion loan originations. And we also know their financial sales surged by 142%, which are phenomenal numbers. But the news gets even better, because in Q1 of 2024, analysts project that SoFi's revenue will be $576 million. That would equate to a 25.1% year-over-year increase and a GAAP EPS loss of just 1 cent. For the full year estimates, we see forecasts which indicate profitability in 2024 with GAAP earnings per share estimates of 6 cents. Again, I think this is going to be higher than 6 cents because I believe they're going to be profitable literally right now. But their total revenues are going to be around 2.522 billion, which equates to a 22.7% year-over-year increase, which is phenomenal. As recent as last quarter, the CEO, who is Anthony Noto, emphasized that their non-lending segment is a huge growth catalyst for this company. And we are anticipated to see these results on January 29th, which is when they will release their earnings. We also saw 2 financial institutions weigh in on this company, such as BMO Capital, which initiated coverage on the stock and gave them a price target of $9. On the other hand, we saw Barclays maintain an equal weight rating for this company, and they raised their price target up to $10. The current share price for SoFi Technologies hovers between $7 to $8 right now, but after the earnings report, we could definitely see them achieve a $9 to $10 price. We also have to take into consideration the resumption of student loan payments, and since SoFi Technologies is a student loan refinancer, the demand for this overall product and service is going to be very high. And this demand will lead to more revenues and greater profits, which is why many believe this is a top fintech stock to invest into, which could potentially double throughout the year of 2024. The author of this article advises investors to try to purchase this company below $10 before it's too late. However, management anticipates full year 2024 profitability, and that's exactly what I'm forecasting as well. If SoFi can maintain this profitability, we could see this company surge well above $10 in the future, and I can't wait for that, but I would love to hear your thoughts about this down below. Now let's talk about an under-the-radar stock that has nearly quadrupled so far in 2024, and it's none of the Magnificent Seven. If you didn't know, the Magnificent Seven stocks refer to Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta Platforms, and Tesla, which together delivered gains of 48% or more during the year of 2023. However, even the performance of the best stocks on the market, such as the Magnificent Seven, pale in comparison to what investors made with this stock. The stock I am referring to is ticker symbol LBPH, which is Longboard Pharmaceuticals. Now, if you've never heard of this company, I don't blame you. This is a very under-the-radar company until recently. At the end of 2023, their market cap was very low, coming in at just $144 million. But then things changed. On January 2nd, the company announced positive results from its Pacific Base 1B/2A clinical study. Essentially, this company has a pharmaceutical which could help reduce the effects effects of epileptic seizure episodes. And although they have received positive results from this phase 1b and 2a clinical study, the word positive really just doesn't convey how bullish this actually is for the company. So this pharmaceutical could absolutely be amazing in helping people manage epileptic seizure episodes. So how good was the study? Well, the study actually conveyed very positive results to where patients who received the pharmaceutical by this company experienced a 53.3% median decrease in countable motor seizure frequency. They also tested people with a genetic form of epilepsy, and they experienced a reduction of 72.1%. And these are very impressive numbers, which makes this pharmaceutical extremely valuable. But what's probably the best about this pharmaceutical is its safety. It seems that the pharmaceutical was very well tolerated by the vast majority of participants. This is why the CEO of the company wants to ramp up to advance this pharmaceutical and get them into late-stage testing. As of right now, these are very impressive results for this pharmaceutical, which could lead to swaths of revenue coming in for this company. Longboard is also in a good financial position to enter into these late-stage studies. The reason for this is they raised gross proceeds of around $241.5 million from their public offering. These results were so impressive that it caused the share price to absolutely explode. Again, the ticker symbol for this company is LBPH, and they currently trade for around $22.07. But the crazy part is that there could be more upside in this stock. Even after their tremendous gains, Wall Street remains bullish on this company, to where all 7 of the analysts that were surveyed rated this stock as a buy rating or a strong buying opportunity. Even the most bearish, negative, critical price target of this company would indicate 28% upside from its current levels. And when we look over to the more bullish analysts, they see nearly 77% growth still left inside this company. So if you are an investor that could afford a little bit of risk and you want to invest into an explosive stock, then this could be the company for you, because there is still plenty of room for this company to grow, especially if their late stage studies come in very positively. As of right now, Longboard Pharmaceuticals is a very attractive buying opportunity, but there is immense risk in this stock. Just to name a few risk factors, first, the company has a very low market capitalization. They have unproven pharmaceuticals, and the company has not actually achieved late-stage studies as of right now. For all we know, maybe this pharmaceutical could have detrimental side effects over the long term. So until the long-term studies come in, I think this company is temporarily too risky, and that's why I personally am not going to be investing into this company. However, I at least wanted to put this company on your radar, considering that this company has experienced a huge surge in their share price. So if you are a stock trader, I would encourage you to look further into this company. With that being said, remember to practice proper risk management. Always make sure to do your own research, and I personally am not buying into this company. But with all of that being said, go ahead and annihilate that like button right now. Subscribe if you are new, and I will see you in the next YT video.